Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be joined by one of the top contributors in the Bitcoin community, none other than British Hodl. He's got a YouTube channel, a great following on Twitter or X, and is passionate about educating people on the benefits of Bitcoin. Before we get into all that though, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently following British Hodl, what your thoughts were on today's discussion, and your outlook for the price of Bitcoin moving into next year's halving event. Now with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got a really exciting Bitcoin guest for you. British Hodl is joining us to talk about his platform, some of the stuff he's seeing in the Bitcoin space, and give us a little bit of direction on his market outlook. So thanks so much for being with us here today and a lot to cover.
It's my pleasure. Thanks for having me.
Yeah, I think it's a great collaboration. So I understand you do a lot of work in the Bitcoin space. You've got a YouTube channel, a robust Twitter or X following as well. And some of the articles or discussion points you've been talking about recently really caught my attention. So I wanted to kick off today's chat talking about the upcoming spot Bitcoin ETF approval and what your thoughts are there.
Yeah, I've said that I think it's the single most important event for Bitcoin since Bitcoin's inception in terms of ownership. With the ETF, people that don't understand Bitcoin will own it. It's like, people always say, you have to understand an asset before you own it. Well, how many people understand bonds, right? But every retirement portfolio has bonds in it, but they don't understand it. Why? Because most people outsource their wealth management to people they perceive as experts. And one of the ways to do that is through an ETF. And an ETF, once Bitcoin is securitized, it allows investment managers to allocate to Bitcoin, pump up the returns that they're providing for their clients, and look good. So all of the incentives are lined up for the ETF coming out and really causing a storm over the next 10 years.
Yeah, I would definitely tend to agree. I think it's going to be a huge catalyst, and that's kind of a nice segue to an introduction here. So as we talk about new people coming into Bitcoin via the ETF, I'm interested, British Hodl, to know kind of how your Bitcoin journey started and how you got involved with this space.
Yeah, so my background's real estate, stocks, and gold. And I thought Bitcoin was a complete scam in 2017. I had people around me sort of rumbling in it because you just do when you're in investing. But I thought it was a complete scam. Me and my best friend were smoking cigars and we bought a bunch of Bitcoin each one day, sitting smoking cigars because we were like, well, this is a scam, but it's probably worth the trade at least for the next couple months. So anyway, a couple of weeks later, the price doubles. We're back at the same cigar lounge with the same seats. And we look at our value, we're like, hey, let's sell this shit. We've just paid for cigars for 6 months. That's it. That was a good trade. And obviously, I watch it go all the way up to 20, telling myself it's a scam, it's a scam, it's a scam. And then I had the confirmation bias that it was a scam because the price came down and it crashed from 20. And then I just forgot about it. And then during the pandemic, at the early stages of the pandemic, a friend of mine who I take very seriously started telling me about Bitcoin. And I said, this is a complete scam. I don't know, but this is a guy I fully respect. And yet my confirmation biases were telling me that he was getting it wrong. And he said, we're not going to have another conversation until you listen to the book called The Bitcoin Standard. And then so one day I was walking around the park in London, listening to the Bitcoin Standard, and he mentioned one phrase, and because of my gold background, life just stopped for me at that moment. And that phrase was, the phrase was the stock to flow ratio, right? Now, a lot of people, stock to flow is irrelevant for them, but when you've had a gold background, you understand that what makes an asset valuable is its hardness. And one of the ways that you measure hardness is through stock to flow. And as soon as the author, Seyfedin Ammous, wrote, as soon as I heard that, it was almost like the matrix opened up. I could see exactly what was going wrong and, quite frankly, where I had messed up. And so that's when my journey started, I would say.
Amazing. I love hearing those orange pill moments as they are called. And I've also read the Bitcoin Standard, and I specifically remember that part of the book. So I wanted to draw on that a little bit because you've got such a unique background in gold. We just introed the ETF. We're talking about stock to flow ratio. Why is that important specifically going into halving? And in your opinion, what's going to happen there once the new supply is cut in half?
Yeah, listen, look, stock to flow, for anyone who doesn't understand what it is, it's a very simple concept. It's how many years of flow does it take to replace the on-ground supply, i.e. the stock of an asset. And the longer it takes, the harder the asset is, and therefore the more valuable it should be. People say, oh, okay, that sounds very simple, but humanity, without even understanding what this is, we seem to find a way to allocate to the hardest assets. That's why real estate has the highest market cap, because it is the hardest asset. It's like 120 years approximately to replace all of the real estate on Earth if it was all blown up tomorrow. And then next is equities, because it takes, it's roughly 60 years, something like that, maybe 70 years. Equities is a tough one. It's not, stock to flow is not ideal to measure equities. And then underneath that is gold. It's about 50 to 55 years to mine all of the gold. And of course, real estate has the biggest market cap, equities is next, and gold is next. And so Bitcoin having a fixed supply and a supply issuance program that lowers its supply by half every 4 years basically punches up the stock to flow until the stock to flow is infinite, because you just can't get any more. Yeah. So that's why the ETF is relevant, because it is a faster way to eradicate that supply.
That's exactly what I was going to say. Yeah, it really does change the dynamic, and looking at real estate and gold and comparing it to Bitcoin, it really is quite a contrast given that 21 million fixed cap. And the thing that I want to talk about, some price prediction stuff here too, but the thing that always gets me is in all of these projections, everybody's dividing by 21 million, but so much of that Bitcoin supply is held by people who are not selling. They've lost passwords, they're institutions. So I really think it's going to have a dramatic price effect here post-halving. Now, one of your recent YouTube videos, you talked about the $1 million price target, and we've seen price targets all the way from 100,000 to $1 million to 10 million. How big of impact do you think this halving is going to have in addition to the ETF and some of the political developments we're seeing on the price here in the next 12, 18 months?
Yeah, I mean, I just released a few days ago my first ever price prediction video of my own thinking. So people can go watch that for the mathematics behind that. But I think that without an ETF, because an ETF is the game changer, an ETF is the escape velocity moment for an asset. The gold was going up for a couple of years and going down and sideways. As soon as the ETF was approved, it had 8 consecutive up years throughout, including 2008 and that whole crash and printing period too. So the ETF coming out changes the game. But I think without the ETF, my price prediction is somewhere in the region of $280,000 a coin at the peak. If the ETF comes out, it could be ridiculous. If the ETF comes out, I go back to the person who originally created the very first stock to flow model on Bitcoin is an anonymous analyst, and his name is Plan B. And his model, his very first model, there's a lot of models that you can criticize that he put out, but his very first model tracked everything quite well, especially in this last cycle. And that model predicts a price of around $450,000 to $550,000.
Okay,
so
and
I think we get there if an ETF comes out. If an ETF does not come out, I think around the 280 level at the peak in this next cycle. But again, every price prediction video is wrong, right? And every price prediction video is right. So there's always ways that we'll go, okay, I was right about this, but I was wrong about this. So price prediction is irrelevant. The main thing that people need to understand is you've got an asset, finally, that actually has a finite supply. And so you should focus on getting some of that.
Definitely. And I wanted to talk about that because that's an interesting point you brought up. Not only is the ETF going to expand exposure and obviously money flowing in here, but you think it'll actually extend the next bull cycle as well, hey, out past the 3-4 years that we kind of traditionally expect?
Certainly, that's what happened with gold, right? And if it happened with gold, which has a reflexive supply curve, Bitcoin has a fixed supply curve. So, what do you do when there's just a consecutive, like right now? Fundstrat put some research out, and they said at around $25,000 per Bitcoin, it was taking around $25 million a day to maintain the equilibrium price. So there was $25 million of selling and $25 million of buying, and that kept the price at 25,000. Well, if an ETF comes out, that equilibrium could jump by 5x, because if you believe what the ex-managing director of BlackRock is saying, that there will be, 150 to 200 billion dollars coming into Bitcoin over the next 3 to 5 years, you're looking at $190 million a day worth of purchasing, which pushes the equilibrium price to 200,000. Right? It's like 198,000. So that's just the equilibrium price. That's before the FOMO kicks in. That's before the supply tightens up. That's before people go, oh, wait a second, maybe I should hold this. That's before all of that, right? So, and we're now entering a halving where for the first time, the supply on exchanges is actually declining. So there's a lot lining up here. And I feel like, or I think that people have analyzed the previous run in 2020, the previous halving cycle, were disappointed by that because it didn't reach the six-figure level, and now they're gonna completely miss the boat with this one, because this is where it's all gonna happen. That's what I think. We'll see what happens.
Yeah, I think very similar to you. I think the last bull cycle was cut short, and I think we went through a period of the perfect storm there with all FTX and all of these negative Bitcoin narratives in the news, and now it's the complete opposite of that, and it's just lining up for an amazing run here. Now, the other thing I thought was super interesting on your channel the other day, not only were you talking about the amount of new money that's going to flow in or potentially flow in via the ETF, but you were talking about the types of people that are going to own Bitcoin, and talking about high net worth individuals not looking for trades, looking to actually reallocate some of the money that's traditionally tied up in real estate, being kind of the second hardest asset class. So can you talk to us a little bit about that? Because I thought that was a really interesting point I hadn't heard before.
Yeah, at every epoch, at every stage of an asset's growth, there is a new type of buyer that comes in, right? First, you get all the speculators, then you get all the people like the medium-term traders, and then finally you get the long-term holders that realize, okay, this is an established asset. I don't know what more Bitcoin has to do to become an established asset, rather than having BlackRock's entire sales team focused on selling it, right? That's what they'll do. Once they've got a product to sell, they're going to sell the product. So, this is now an established asset, which means that the people who are owning real estate, the people who are owning equities, the people who are owning all of these quote unquote legacy assets are now going to have the option, at least the thought process, that maybe I should allocate some into Bitcoin. Bitcoin has never seen that before, right? We've never seen a demand shock like that before. And so what this does is that, the problem really for people like me and you is that when these people get involved, I'm talking about people with, $150 million in net worth plus, they have no reason to sell an asset, right? We might have a reason to sell or generate liquidity on an asset because we've got to pay for living expenses. Somebody who's got, $150 million to allocate to Bitcoin has got a net worth that's much higher than that, and they're pretty okay, right? The house is paid for, their lifestyle's taken care of. They don't need to sell their Bitcoin ever. And that's really the problem. So that's why I keep encouraging people to understand what's going on and get to one Bitcoin extremely quickly.
Yeah, they're gonna hold on tight, and I think that definitely is coming based on conversations that I've had. Now, I spend a lot of time.
Sorry to interrupt you, but one of the other things is they're also trained to do that, right? Somebody who is a real estate investor for 40 years understands what it means to hold an asset and be responsible for an asset for 40 years. They're not the t-shirt and sandal wearing traders that are out here trying to generate liquidity so they can go and get drunk. We're now dealing with very, very serious people that have had a lifetime of training, understanding that if I just hold the asset, it is going to work out better than me trying to trade the asset. And if they've been trained to hold an asset forever, that's what they're going to do.
Yeah, completely different mindset, but I thought it was a really astute kind of investigation or topic you had there. Now, I know you are very adamant about getting to one Bitcoin. I've been following that advice and continue to buy and buy and buy. But we cover a lot of Bitcoin mining companies on my channel and other ways to get exposure to Bitcoin. So in your opinion, what is kind of the best way to go? Is it self-custodial Bitcoin ownership as a core portfolio asset?
You should have one Bitcoin at minimum, self-custodied, hidden away for your future family and your future endeavors. After that, you can then start analyzing what your risk profile is, what your temperament is, all these other things, and start figuring out how to generate a higher return on top of Bitcoin. Certainly, miners during a bull run tend to give a 3x return to Bitcoin, which is pretty good. But you've got to understand what that involves, right? And most people don't. That's why most people lose money when trading. So get to one Bitcoin first, and then start looking at these other things. I've been doing this for 18 years. So for me, owning my Bitcoin that's self-custodied with a multi-signature wallet, I'd have to fly to 3 countries to actually use it or move it. That's there, right? But in my broker account, I of course have exposure to mining companies, of course have exposure to, what I like to call layer 2, 3, 4 to the underlying Bitcoin position that I have. The way I think about my investing is that it's a macro play. I've never been a good trader, right? And I know that about myself, right? I've just done the stupidest trades in my in my career. There's just ridiculous trades, right? There's a 3 days period where I lost $100,000 on an SLP trade, like stupid shit, right? And so the way I think about my portfolio is that I want to take a macro view. Like, what is the macro view that I'm going to take? And once I understand the macro view, I now want 50% of my position, the core foundation of the triangle, so to say, as the underlying asset that will benefit from that macro view. So that's Bitcoin, right? My macro view is that Bitcoin adoption is going to continue to grow, and therefore I need the bulk of my wealth in Bitcoin. On top of that, I'm going to take a layer 2 position, which is going to be slightly riskier, slightly more high leveraged on top of the underlying foundation play, which is Bitcoin. So that might be Bitcoin miners, right? Actual stock in Bitcoin miners. And then the final tip of the triangle, I want the highest possible risk yet to reward ratio position to give me that extra, the extra reward if this plays out. And if it doesn't play out, the foundation of the portfolio is going to take care of it. And that's where I might go to derivatives, right? And that's how I do it. So, anytime I place a derivatives position, I accept that on the day that I place it, it's done, right? I've lost that money. I mark it now to 0 in my mind because I know the foundation of the portfolio is going to play out. And that's pretty much how I do it. So overall, it will generate a higher return than Bitcoin itself. And of course, the goal of my layers 2 and 3 are to acquire more of the foundational asset.
Yeah, I love that strategy and the analogy to the triangle. It's a pleasure chatting with you. I know we've covered a lot of ground here today. Everything from the ETF to price prediction to your asset allocation analogy we just touched on. Is there anything else we've missed or anything else people should be aware of in the Bitcoin space right now?
Yeah, I mean, look, well, your audience, right, is going to be people who are used to legacy investments, right? Just like what my background is. The thing that we are going to struggle with is going, wait a second, I thought Bitcoin was for the happy hippies, as I like to call them. I thought Bitcoin was for, the anarchists. And what I would tell you is that you have to get good at reading signs. Anyone who's watching this, if they're into legacy assets, there was a sign that you saw that took you on the journey towards whichever legacy asset portfolio that you built. Whether it was real estate, stocks, whatever it was, or gold, there was a sign that you saw. And that sign was BlackRock filing for the ETF for Bitcoin. And if you have not seen that sign, then I would urge everyone to study it. Study what the meaning of BlackRock filing for an ETF is for an asset. Study the fact that BlackRock in its entire history has filed for 576, I think, ETF applications, and they've been approved on 575. They've had one declined in their entire life, right? So BlackRock filing for the ETF, and by the way, the one that was declined for BlackRock, the whole industry was declined. So BlackRock has a very, very good track record. They are now getting into Bitcoin. They're repositioning Bitcoin as a flight to quality, with the CEO doing that for them. And so if you're not reading these signs, I think you're messing up. And I think you have to understand that there is a difference between being emotionally attached to an investment and analyzing an investment intelligently. So if you've got $1 million in real estate and you're not able to take a $37,000 risk on Bitcoin when the CEO of BlackRock is telling you it's a flight to quality and they have an ETF application, to me, that means that you have your emotional temperament is controlling your rational thinking, right? We're talking about a 0.37% allocation to Bitcoin on $1 million real estate portfolio. So all I would say is I think people need to spend time in people that are in legacy assets, like my parents, for example. They need to spend time understanding the asset. My parents were lucky; they had me, right, to bash them over the head about it. But most people don't have that, so you're responsible for it. And unfortunately, it's not like real estate where there's always more real estate being built. There's only 21 million ever. So if you don't get this and you don't get an allocation and it takes off, whoever comes next with your last name will never, outside of the miraculous, they create a multi-billion-dollar company and sell it and get into some Bitcoin. Outside of the miraculous, your progeny will never, ever have another chance to acquire the same amount of asset that you will right now. And that should be awakening for a lot of people. So spend time learning about what is going on here.
Very well said. And the Bitcoin Standard, as we noted at the start of the discussion, is a great resource and a great spot to start if you're exploring this journey. It's been a real pleasure chatting with you, British Hodl. I'm glad that you made some time for us. We really appreciate you coming on. Hopefully this is the first of many discussions. Thanks again, and we'll talk to you soon.
Absolutely my pleasure. Thanks for having me.
Cheers.